All right, so I got a couple things I got to do after this anyway, so I won't drag it on long and sit here and chit chat. Yeah, nothing really too new to speak about, and it's pretty obvious what's going on out there right now. You got the Fed tightening financial conditions, growth stocks in a severe bear market, and you could make the case this is the end. Okay, the end doesn't, and more than likely doesn't equate, doesn't translate into a V-shaped move. A lot of these things are going to be dead and buried, and you're going to see that hockey stick price action. Unless they have whoever has issues and goes out of business, and that's usually, that usually is the end game. But these things, you got a lot of these things in free fall. If they're not in free fall yet, just wait till earnings if they haven't reported it yet. Because once they come out with earnings, like this, what was it, $50? Now you're talking 30. This is a disaster. I mean, this is a disaster. I do not remember, and we were talking about this the last couple of weeks. I do not remember such a severe crash in a market where the indices basically started correcting this year. The indexes topped out in what, January? And I mean, you're talking about an all-out wipeout. You know what I mean? A washout. So I'm trying to think. Like the only thing I can remember even close to this is the tech bubble. But it did weigh on the indices a lot more. January 3rd was the top. Yeah, and a lot of these things, you had some of these guys like Snow and you have a second burst. If you got, right here, right? Had a second burst, but a lot of these things topped out once the Fed, the money supply stopped accelerating and sort of flatlined, and then now is rolling over. This was all tied to the Fed, and loose money. Not to say they wouldn't have rallied, but these crazy moves. So now they're going to overshoot to the downside. Some will survive, some will not. And eventually there's going to be nice winners that come out of it. But that's a tough game to predict. I'll tell you that right now. It's a tough game to predict because surviving this, for them, whoever survives this, just trying to survive this is a tough game in itself. Kind of got to wait for the dust to settle. All right. Anyway, we know this already. This has been going on. This is nothing new. It just keeps getting worse. And again, you don't have to be a market aficionado to make the statement we're closer to the end than the beginning of the crash in growth names. I don't see how that cannot be the case at this point. There's nothing left. There's nothing left. All right. As far as the markets are concerned, we are in quite the, sometimes I create my own words. I hear them somewhere, but kerfuffle. That's the word that comes to mind. Is kerfuffle a legitimate word? Kerfuffle? Conundrum, kerfuffle? I think it's a word. That best explains it. But we are in a little pickle here, okay? And again, nothing new. But in hindsight, everything is a little more obvious, right? But kind of the stuff we've been talking about, we have no idea how it's going to resolve. All right, but it's this simple, okay? You had a Fed, and I'm gonna talk it in Jesus language here, right? You had a Fed rigging the game on the way up. Okay, you had a insane pandemic. The Fed had to throw in the kitchen sink. They overdid it. Nobody can knock them for overdoing it. The only thing they can get knocked for is staying too long, too loose. Okay, but when everybody thought we were going to turn into zombies, back when COVID was starting to spread like like crazy back in that February, March period, the Fed did everything it could possibly do to save the economy, right? Because the first time ever, you had a global economic shutdown, right? So whatever, we all know this. But what's happening now, and Carl, if you're out there, this is something you and I have been talking about, to unwind that, right? To adjust that after you throw in the kitchen sink, okay? It's one thing if it works, and it usually does, but the process of taking that back is nearly impossible, okay? Is nearly impossible without enduring some legitimate pain and something breaking in the credit, currency, economy, any of these markets, right? Something's likely to break when you're draining that type of liquidity. And, again, I could be wrong because I'm no genius when it comes to this. I think raising rates has nothing to do with any of this, okay? It's the threat of tightening financial conditions and QT, okay? That's really reining in all that liquidity that was out there. In other words, think of all the places money went from those COVID lows, from SPACs to Kathy names to new technologies to EVs. Remember the hype behind the EVs? All these areas flooded with money, right? Bitcoin, jarred farts, NFTs, you name it, right? You name it. So much money all over the yard, okay? And now the Fed is tightening the spigots, right? And you have all that loose liquidity all over the place now starting to come out of the system, okay? Obviously, there's going to be a lot of ugliness out there. And we've been seeing that, again, these hyper growth stocks started topping out when money supply topped out. This is back in March of last year, long before the indices. All right. And that's what I'm saying. Now we're just seeing how the obvious ugliness in all of this. Okay. But here's the pickle we're in right now. Okay. You have the Fed, who basically has no choice. Okay. And has to tighten financial conditions because they have to battle inflation, right? They got to cool off inflation. All right. And you hear that term used a lot, right? They got to tighten financial conditions. Okay. Because again, they were coming from an extremely loose financial conditions. You guys a lot of times see that chart being thrown around. The Goldman one's the more popular one. I even like the one out of Mizuho, right? So those of you who may not be familiar with it, this is what it looks like. All right. To put it into picture form, again, you don't need to know the details, just so you get an idea of what it means, okay? So right here, this is a financial conditions dashboard, okay? The one to pay attention to here that I'm talking about is this, okay? Here are the COVID lows, right? Because of a pandemic, financial conditions were extremely tightened up, okay? And because of what the Fed monetary policies, fiscal policies, you name it, look at that move, right? From tight to loose, okay? And now you see this? See where this topped out, right? Stop going higher. And now heading in the other direction, all right? So just so you understand, like when you hear this lingo, for those of you who may not be aware, I know most of you are, this is what they're talking about, right? So the Fed is telling us, okay, there's no choice in the matter. They have to tighten financial conditions, and basically, no matter how ugly it gets in the equity market, is irrelevant. All right. So what is this? What makes, what are financial conditions, right? The bulk of it. So in this particular indicator, so you know what moves it, right? You got risk assets, equity prices, right? So as equity prices go down, this will tighten up. You have credit spreads. Okay, you hear that being spoken, being talked a lot about now, right? As credit spreads widen, things get a little more dicey, right? the spreads, bid-ask spreads in the credit markets. Okay, so I want to show you guys another chart because I think this tells all. I wish I had all this handy because we looked at a lot of this on Sunday, but then we'll talk about some other stuff that McElliott was talking about today too. Hold on. Oh, you know what I could do? I don't even need to. All right, I might as well while I'm here. Let's see if this will do it. Yeah, of course not. That would be too easy. What happened? Hold on. Oh. Yeah. What I do? Am I typing something in wrong, or it's just Twitter? It's just Twitter again. I can't. So forget that. That takes care of that. Let's do. I spelled Jesus wrong. Figures. All right, we'll look at this chart anyway. Oh, I knew it was something on my head. We'll look at this chart, and then the other chart's just blown up so you can see it better. All right. So this is the same premise. Okay, these are credit default swaps. There's another chart, corporate bond spreads, measures the same thing. And what you'll realize is when we get into these type of climates, okay, with this type of environment, especially when there's high correlation, okay, it's usually this trumps all. Like there really is nothing else that, almost to the point that nothing else matters, okay? As this chart heads higher, and you remember we were talking about this a few weeks back, could have been a month ago or even more than that. As this chart heads higher and credit spreads widen, okay, late March, okay, you will see, so over a month, thank you. You will see that undoubtedly it's going to weigh on price action. Okay, there's no choice in the market, in the matter. Okay, you're not going to see, again, more so in this environment, not in. I'm not going to make the statement that anytime credit spreads widen, you're not going to see an up day in the market, but more so in this environment. What you'll rarely see is this happen and the market move higher with it. Okay. For a variety of reasons. And, the way I like to explain is just think of like just algos. Every time credit spreads widen in this climate, they are going to slam sell buttons on any intraday rally, any move, any attempt at a move higher. Okay. So you get this high correlation, right? It's pretty obvious. And that's why I wanted to show you the other charts. It's almost a mirror image. You get this and you get this, right? When you get a little break in credit spreads, it allows the market to move higher, right? You get a little rest in credit spreads where they're not heading higher. You get it a little window for a rally, right? But when they continue to make new highs, usually price action is just going in one direction. It sure isn't going in this direction, put it that way. Okay, so we know the Fed is, again, almost mechanically going to tighten financial conditions, and it's likely including this, okay? So in simple English, that's telling us that for any squeeze to find follow through beyond that is near impossible, okay? The last thing the Fed wants with this mandate that they currently have right now is for a squeeze to find follow through, right? In the equity markets, for a rally to go test highs or anything like that, okay? Because what's that going to do to financial conditions, right? It's not going to tighten financial conditions, it's going to loosen them. Okay, that's the total opposite of what they want done. All right, so this is something that is in the way of not just an up move in the markets, okay, of buyers even becoming somewhat interested in taking on any new risk and putting money to work, right? why in God's name would you stick your neck out in any big way, okay, unless you knew that the Fed was going to pivot and alter course, right? So that aside, if you have an idea that the Fed is going to tighten financial conditions, why would you put on any risk in the equity markets? You understand? So that's kind of the kerfuffle we're in right now. Okay, it's almost like any sort of squeeze or rally, we can still squeeze, right? You saw that here, where we get a little window for an upside move. But here's the problem. And you remember we were talking about the move then, okay? You look at it as, aside from the opposite of the Fed put that we used to talk about, the Fed selling calls, right? That's the term going around, right? And what did Powell do? He danced out the biggest dove, right? The biggest Fed member who's a biggest dove who's a Fed member in Brainard, danced her out and turned her into the biggest hawk you could ever possibly imagine, and basically topped out that squeeze right when he needed to. Because they couldn't allow this rally to go beyond this, right? And maybe you can make the argument that they can't control everything, okay? But they're going to do everything in their power, all right, to, again, rig the market and weigh on asset prices. They have to, okay? That's what they're doing to battle inflation right now, right? They want to tame inflation. Their goal, right, and you hear another term, soft landing, what they're looking to do is, what they're hoping is they can continue to do this and it will lead to inflation rolling over and cooling off, and then they can be less aggressive when it comes to doing this, okay? They can be less aggressive as far as raising rates and tightening financial conditions, all right? But the argument there is they have an awful, awful track record when it comes to that, okay? Their game has always been, I don't remember ever a soft landing, supposedly there was, okay? But their game has always been throw in the kitchen sink to prevent a major recession, right? To bail out the markets and the economy when things got frisky. And then when you needed to cool things off, put the economy back into recession. And that ultimately cools things off all by itself. All right. This go around's a little more dicey because obviously, they never had to battle inflation like they do now. You understand? Without the threat of inflation, there never was that fear. Without the threat of inflation, you would already start hearing chatter of the Fed put being in play, and this, the current market conditions are on the Fed's radar already, without a doubt, especially with the carnage and a lot of growth areas and stuff like that. All right. But the main difference this go around is they can't. Okay. Because inflation is extremely high, right? So they have to do the opposite. And the first thing they have to do is tighten financial conditions to cool off inflation and then worry about that. You understand? And not to get all macro on you guys, a lot of this shit I think is really interesting, but it means nothing in the grand scheme of making money in this game, right? A lot of times it'll cost you money, but this is a rare time, just like the recent rally we had. Again, and think of it this way, right? A lot of stuff during that COVID rally, right? That COVID rally frustrated a lot of experienced players like myself. Why? Because a lot of our disciplines, a lot of the rules we built throughout our career in managing risk, taking profits off the table, all those sorts of things, they meant nothing in that rally. They meant nothing, right? Anytime you sold, you were a jackass. It cost you money because you were dealing with a rigged game, right? So now, I like to compare to that situation, but it's the total opposite. A lot of the stuff that usually would work, okay? And I'll give you an example, like where current sentiment is right now, okay? Where sentiment is right now, you don't have capitulation, you don't have panic, right? Nowhere near it yet, okay? But you have enough bearish sentiment out there that undoubtedly you would see a healthy multiple day squeeze off the type of sentiment we have, okay? And we're not seeing it. You see it intraday, and then the market goes from green to red in milliseconds, okay? But this is a different environment. You have the Fed rigging the game the other way now, right? The hands in the cookie jar, but in a different way now, okay? So these are just things we have to acknowledge and not get frustrated and disinterested, but wait it out, okay? Wait it out. And right now, because of the Fed doing what they're doing, okay? And just so you guys know, because I get the question a lot, well, when will this change? Like nobody sees when this will change. There's two ways, two scenarios where what the Fed is doing, they would get them to alter course, okay? One would be what I mentioned, something breaks, okay? And meaning that something goes boom in the credit markets, in the currency markets, okay? The stuff that really matters. Equity prices really don't matter, especially off the rally and the move we had over the last few years, okay? Something systemic in the plumbing of the financial system has to go boom, all right? And then you'll see the Fed pivot so quick, you won't believe what you're looking at, okay? Just like that, right? And that's what a lot of players are ultimately, like a lot of pros, seasoned pros are waiting on right now. And that's why you got a buyer strike. Nobody wants to step in the way of something that needs to go boom, right? You wait it out and buy the boom, right? Make sense? So that's why you got sort of a buyer strike right now. Nobody wants to front run that. No one wants to get ahead of that. Why? Because you run the risk. What if something doesn't go boom and this backdrop lingers for a decent length of time, right? Now you were front running the Fed breaking something ultimately to get caught in a treacherous bear market that goes on for months, if not years. You understand? So scenario one would be something in the plumbing system, meaning currency market, credit markets, repo market, something that really matters, breaks and gets the Fed to hit the brakes, okay? And the other scenario is, this just gets really ugly, really quickly, and leads to a break of something. Because what we're seeing, especially like the carnage in individual names, okay, it can't go on forever. Eventually, it's going to do real damage out there. And you don't see it initially, but then eventually it comes all at once. You know what I mean? And whatever, it leads to, the wealth effect aggressively decreasing, aside from companies having real issues, right? Credit issues and leading to other issues. So the good news is at the pace we're going at now, and Hartnetta Bova made this comment, bear markets, the best thing about bear markets, they're a lot faster than bull markets, right? They have a tendency to end a lot quicker than bull markets, all right? So the odds are that this will resolve a lot sooner than it looks to us right now, okay? So that's kind of what we're on wait and see mode. Now, the frustrating part, and I'll tell you this, and you guys probably all feel it right now, the most frustrating part about trying to navigate in this environment, okay, and I'm being dead straight with you, not taking little losses intraday, like I'm sure I know I am. I'm sure many of you are, or getting nicked up, or the flow sucks, getting annoyed. All that stuff is frustrating. But the most frustrating part about this environment is when you get close, like we are now. Okay, and that's what I wanted to talk about with you guys. Like, if this market continues to accelerate to the downside from here, you're going to get capitulation. You're going to get something ugly at the end of that move. Okay, and that will increase the odds that a floor is in and possibly puts an end to what we're dealing with right now. But the frustrating part about these bear market moves is every time you get there, you get this, and it resets the whole effing thing. You understand? The whole damn thing. You get a squeeze, not even this whole thing. You get a squeeze of half of this, a quarter of this. And all of a sudden, it resets sentiment, positioning, everything. And you got to do it all over again. All right. And this is what's been happening. Okay. This is what's been happening. Right. We got, and I kid you not, like right here, the initial leg down here. Okay. People got really bared up. Positioning was really bared up, thinking the big boom was coming. People were getting nervous and putting on bearish positions. This little squeeze kept them in check, right? Then you're going to roll over to new lows. Then exactly here, if this went like this, instead of doing this, it likely would have led to capitulation and a lot of damage over a short amount of time. Okay. It didn't. And you got a huge move that reset everything. Okay. So now you have even that much more work to do. And that's exactly what it took. And like I mentioned on the Sunday webinar, we're right here again. We are right there again. I think we're even beyond that. And I'll give you guys an example because we looked at this quite a few times. Late 2018. Again, similarities, but a lot of differences as well. Okay, so I'm not comparing exacts here. Okay, but a similar feeling. Okay, we're kind of right here. That's what it feels like to me right now. Okay, right. I would say in the midst of this leg. Okay, it looks harmless, but boy, this was scary and painful. Trust me. Okay. So, and think about it, right? If we're right here, somewhere in here, and we still got to do this, and that feels like the bottom's falling out, it feels awful. Okay. It feels awful. And the same thing with the Fed. Again, different situation because you didn't have inflation to worry about. That's the biggest difference. I think the most important difference. Okay. But you had Powell as hawkish. If you guys, for whoever wasn't around, you wouldn't even recognize Powell the way he spoke to markets back then. He was a tough guy. Okay. He was a tough guy. And he was as hawkish as you could possibly get. Raising rates, quantitative tightening is going to be on all autopilot. Market, you could go F yourself. That's basically his mentality back then. All right. And then the market said, oh, we could go F ourselves, huh? Let's show you how we're going to go F ourselves. And did the job right here. Okay. Led to Mnuchin calling banks, the whole 9 yards, everybody shitting their pants. And let me tell you, when that flip came, when that pivot came, and I think they actually raised rates. They raised rates because everybody was expecting them to. But right after they raised rates, the press conference after that, he sounded like Bernanke. He sounded like a total different human being. Total different human being. Okay. So now he wasn't, not only was he not hawkish anymore, he was cutting rates and putting on more QE. Forget about QT. Okay, so that's how drastic and quick shit happens when things start to unravel. All right. So the feeling again, there's a big difference here because of inflation. A lot of people think it's a big enough difference that it can't play out like 2018. But if there's damage done, in other words, if something in the plumbing cracks off a down move here, you're going to get that Fed pivot. Okay. And that's ultimately what a lot of players are waiting for. And that doesn't necessarily all the time mean that we're going straight higher, right? There's still going to be volatility. There's still going to be periods where we're going to new lows. It's still going to be, you're going to hear like it's not working. If you remember, think about back at the COVID lows, you heard this every time there's some excuse. Well, this is a pandemic. The Fed can't do anything about a pandemic. They can do all the QE they want, and it's not going to matter, right? So there's going to be all those excuses like the Fed lost control and everything else. But the biggest difference is you're going to have buyers show up. And we're going to see it in the flow. You're going to see it in the price action. You're going to see it in a variety of things. Right now, there's just no buyers. And there were no buyers in late 2018 as well for different reasons. Okay, it was during the holidays. Liquidity was awful. Nobody was around. You know what I mean? So you had no buyers then too, and they finally showed up. All right. So that's the end game. Again, we don't know when it comes, when it shows up, how long it takes. Obviously, if we had those answers, we wouldn't be bullshitting with each other on this webinar. All right. But those are the ways, this thing can resolve itself with the information we have in front of us. But right now, and I'm telling you as a perma bull, and I've been, members know exactly what I'm talking about because I try not to scare them into their bunker. There's not one thing to be bullish about out there. Not one. Okay. And that's coming from somebody who's in the midst of putting on a SPY position that I am taking on water in right now and need to add to and can't find the reason to add to. Okay. So think about that for a second. That's coming from somebody on that frame of mind. There is just, besides sentiment and washed out price action, I don't see anything. Okay. Now I'm limited in what I pay attention to as far as, what's actionable to me. But like, I'll give an example. A lot of times we see buying in the flow with time. So in simple English, so you guys understand, you'll see players start to accumulate positions with time, 6 months, 9 months out, maybe leaps, right? They're not looking for results in the next week or two. They know it's a mess, but they want to start building positions. Okay. They know they're early. They expect to be early. We're not even seeing that yet. And if you think about what a lot of these names look like, the beatings, more so on the growth side than anything else, but the beating out there in these names, and nobody's willing to start even nibbling. You know what I mean? With some time. That's how ugly it is. All right. The other thing too, I think he nailed it on that. You couldn't get more to the point than what he did. And that's why I retweeted this 4 times on private Twitter. Hopefully you guys got a look at it. But this is exactly, hold on, where is it here? Okay. This guy from Goldman summed up everything that, he's been talking about, just a lot of us have been looking at. But, it's just too much going on right now. That's not bullish, right? So this is liquidity, right? And he was making the point, a setup for an equity crash, right? Everybody likes to throw that word around loosely. I know the market's going to crash. You get Crashes come when players are either offside as far as positioning, or there's no buyers, there's no liquidity. And you're talking about now, this is as bad as it's been at prior bottoms where you had capitulation, right? So that's where he's making the point, like, you got a pretty awful scenario here if shit was going to hit the fan, liquidity wise. Okay. And it's been getting worse and worse and worse. Yeah, he's had a lot of cool things in this note. Here's some more on liquidity, giving you another look at it. Here, late 2018, right? Like we spoke about, and the COVID lows. This is exactly, we're pretty much right there. Okay. And the difference is, again, the Fed put is not even in the picture. Like, we're at liquidity wise, we're at where we were in 18 and 2020 at the lows when it bottomed, right? When the Fed stepped in. So we're there already, right? So gamma, dealer gamma, you know the story there. Negative dealer gamma adds to the velocity on the sell side. Elevated volatility, but not elevated enough to, see signs of a panic capitulation. But you're seeing more so intraday vol really starting to pick up. Okay. And the reason he makes the point why that's worrisome is because that usually continues to worsen, right? When you start to see it intraday before it goes elsewhere. And again, this is a bad mix, right? With the liquidity setup and VIX showing us that there's more upside. Like, that's the problem with VIX, right? You got elevated volatility on an intraday basis, right? But VIX, it's almost like we're all waiting for that one more pop out of it, right? Like, it's dead right now. And McElliott had an interesting note. We'll talk about that in a second, on the reason for that. All right, but he thinks, the dude from Goldman thinks that's a bad exactor right there to have. All right, and I'm not trying to scare anybody. Okay, there's been a lot of damage out there already. If you want to get bearish, you should have been bearish already. The point I'm making is there's really not a lot. There's really not anything to get excited about. Okay, that's what I'm telling you. There's nothing to get excited about yet. So when you see stuff like that, it pays to be patient. So that this is credit and currency markets, right? FX vol, currency markets are nuts, absolutely nuts. Bond moves, right? Move is the bond VIX, basically. That's been insane. CDX, that's the credit default swap index we follow, and corporate bond spreads. So he's making that point. Again, these are all the things that just are lined up against the bullish case right now. Where's the staples versus? That's one thing too, that's really been a turnoff. The rotation, the sector, the sectors of the market that are seeing the buying, it's had bear market written all over it, right? Bear market written all over it. Corrections, everything gets hit, everything's correlated, there's nowhere to hide. Boom, 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 case closed. People capitulate, it's over. What we've been seeing up until now we're starting to get a little, the correlation, but up until now, there's always been a place to hide. First, you could hide in mega cap tech, then you can hide in energy, then you can hide in commodities, then you can hide out in gold miners. There was always a place to hide. And those are bear market characteristics. You know what I mean? Those are bear market characteristics, because when you're seeing that, the likelihood is it's not over. Okay, because usually at the end, there's no place to hide. They smoke everybody out of their home. Okay, so at least we're starting to see that change. recently. She's talking about percentage of SPX oversold breadth-wise. Again, going back to what I just mentioned, because they've been places to hide, breadth is not as washed out as you would think it is. All right. You had a nice chunk of the market that has been outperforming. All right. So again, if you remember, you probably saw this already, but he talks about everything. Okay. This is another thing that I think is a big deal. Okay. Flows. All right. We spoke about this Sunday. Let me show you a chart. I'll blow your mind. Okay. I put it on you again. You guys saw it, but I'll do it again anyway. And a lot of this stuff is stuff we had to deal with, and we're dealing with now. Okay. So it's not like we still have to deal with it. We're dealing with it now. This chart's bananas. Okay. So look at this here. All right. And this was the problem. And again, I said this on Sunday, just so people understand, why, if I felt all of this, why would I even start buying SPY? Well, I told you guys at the time why, right? Sharpies had covered their short, and I'm willing to place the bet, right, on a position that Sharpies may know something I don't. That's why I did that, right? So because I get that a lot. Well, why are you showing all this and you're buying SPY? All right, just so it answered that question. But this was something else we spoke about that has to turn before we can see a bottom here. Okay, if this wasn't a sign of a top, I need my head examined. Like, I should have been screaming to all you guys to short the shit out of it, because I'm not going to short it. But anyway, the market's always top. They're not going to top here, right? They're not going to top here. They're not going to top here. They're not going to top here. They're going to wait till all this money comes in, right? And then markets roll over, okay? And that's exactly what you got here now, right? So now, after the beginning of this year, you had that huge inflow of fund flow come into the funds, right? You had the window for the market to correct, okay? Now what it usually leads to is a shakeout of at least some of this buying that came in, right? Especially some of these late buyers that showed up late. They usually spit up. Okay, up until just recently, we were still seeing inflows, week in, week out, inflows. They were still buying tech, for Christ's sake. Okay, we're now starting to see outflows. Okay, so we're starting to see the initial signs of capitulation out of fund flows. We needed to see that. There was no shot we were going to see an end or a bottom without that happening. Now, again, when I say an end, it doesn't mean it has to be at a lower level than it was 2 weeks prior, but you understand the process can't end until you see them throw in the towel. And this is insane, right? Insane. So I don't know, looking at this chart scares the shit out of me. So let me take this off here before I even scare myself even more. I don't want to look at that chart anymore. Where am I? All right, so those are a lot of the things that we've had to deal with, and we're in the process. Okay, but the main thing right now is, don't fight the Fed, and that's what we got to do. Now, here's the thing, right? This is another antidote, but the Fed tightening financial conditions didn't have to translate into a lot lower equity prices. You understand? It could have translated into chop, right? A market that just is not doing much. right? Every rally gets sold, dips get bought. That's kind of, again, we're on the verge of seeing that change here, right? That's why we're at that point right here. All right. And again, I think net it's a good thing if it changes, big picture wise. If it doesn't, we're probably again going to be in this just, yeah, the chop is, and it's a wide range, Praveen, so it's not as awful as people may make it sound. Like I'll give you an example of something similar to it. You got to go back a little bit. Where was it here? This is it here. All right. So this. So that. So there's money to be made, but think about how difficult it is. I'll tell you what the tough part is, right now for me, with the lack of sweeper activity, with the lack of flow out there, with the lack of buying, I'm lost in space. Like I don't even know what to buy. Like I am completely lost. Like I have no clue what to do. Okay. I'm being dead straight with you guys. I have no clue what to do. I don't know if these, growth stocks have a lot lower to go. I don't know if energy is a buy on the dip. I don't know if commodity, because right now, like, don't forget this. We were seeing some legitimate flow in commodities up until they topped out recently, right? Remember we spoke about they're going to correct, and we'll see if they come and get aggressive, okay? We've been seeing nothing, right? Here and there, we see an order. We're seeing nothing as far as buying out there. So now I'm just completely lost. Like, even without me buying, I don't even know, at least sometimes I could tell you guys, oh, you like gold miners? Yeah, there's been some solid flow there. There's been nothing. Yeah, and that's another thing too, that I see you guys bringing up certain names. Don't even try to fight this. You know what I'm saying? Like, don't think that your name is going to be the one name that bucks the trend. You're asking a lot. You're asking a lot for you to find that one name that's going to survive. You understand? Survive, let alone go higher. When you get into these type of climates that we're in right now, where there's high correlation and they're smoking everybody out, there's nowhere to hide. There's nowhere to hide. Not your stock, not any stock. You got to really, like, you can count on maybe one hand the stocks that are bucking the trend, and then you expect to be in that one. It's not being realistic. And a lot of times what happens is a stock can look great and you think it's bucking the trend until they bite you in the ass, because that's what they do. They smoke everybody out of their hole. You think you're safe? Oh, I'm in energy stocks, oil, solid as a rock, Ukraine. These things aren't getting hit, right? And then they get hit. So there's nothing safe. There's nothing safe. There's nothing safe. There's no easy money. There's nothing safe. So, the prudent thing to do is you fool around. You try to have some fun, play intraday. I know, that's all I'm doing. You're not going to make a ton of money doing it. You're lucky you make any money doing it. But you try to survive. You stay entertained. The most important thing in this time, especially for you newer traders, is the disinterested part, right? A lot of newer traders, especially when they come in from easy money and thinking that was going to last forever, they get into these periods and they get nicked up, they get beat up, and they lose interest, and they lose interest. And they're not around when that bottom does arrive, whenever it does. And when they return, they're coming in midway through a rally, and they're going to get caught at the top again. I paper trade. There's a whatever. Listen, whatever works, you know, size down to the point where you think it's you're betting the ball games, you know, if it takes, or betting the horses. But you know, listen, this is based on what I'm seeing, you know, and what I've been seeing. A lot of you look at other things and may see something different. I'm just being honest with you and dead straight with you. And I really wish, even if I was scared shitless, but I saw something constructive, I would share it with you guys. I don't see anything constructive. So what would change my tune again? And this is something we spoke about the first time. Okay. The only thing that would change my tune right now at this point is, one, we get capitulation. Okay. If we do get capitulation, at the least, I'm going to add that last piece of SPY calls that I'm supposed to add. Okay. So that's one. And capitulation means spike and to put the calls, you know, what we've been talking about. Okay, so that's one scenario. Another scenario would be that recent Sharpie signal, which they took off hedges and were net long, and then put some, not all of them, but put a little of those hedges back on. They confirm, right? So what that means is we walk into a Friday and Sharpies get naked long into weakness, for Christ's sake, this time. And again, what's that going to do for me as far as action wise? Without a doubt, we're going to add that last piece of SPY that we are supposed to add. Okay, but I'm still looking towards the flow to guide me into what names I can start to nibble at and build positions in. Okay, the last thing I want to do is just buy SPY and get fat on SPY, and that's it. Like that's not my game. You know what I mean? That's not my game. So maybe I'll add some SPY, right? But I'm not going to go bananas, especially if sweepers aren't active. Sweepers aren't active. Because if sweepers aren't active, that's telling me that they're not excited, right? They're not putting risk on yet. So maybe Sharpies do see a potential bottom, but sweepers are telling us that, this thing's not going anywhere right now. So that's kind of where I'm at, so the only thing, that's the only thing would be, something breaks, leads to capitulation. That would be a great sign. Or Sharpies, jumping in here. All right. And like I said, guys, the only reason that Sharpie signal even means that to me, right? Because I told you my mentality, right? Whether you believe it or not, what's going on right now, the Fed hardly knows what the hell's going on right now. All right. To think that we can figure things out, us or anybody we know on social media has it figured out. You're bullshitting yourself. You know what I mean? So if Sharpies took that extra risk and they got aggressively long, right, index futures, then that would signal to me that possibly what I'm seeing, or maybe to put it better, they see something I don't see. Right? So that's the way I'm looking at it. What they did so far, so people are up to date, they covered an aggressively short hedge position. So they were aggressively hedged here. They started unwinding that, excuse me, but the market started heading north, right? Started squeezing hard as they unwound that, which is rare. So by the time we got to here, they had a net long position. They covered all their hedges. They were net long, And like Tree says, which was probably here because that's the Tuesday, okay? And look at the move already, right? And then here they start adding a little bit of their hedges coming on. Right now, Sharpie's bottom line have zero risk, zero exposure, zero. Flat. My voice, I had it a little dry there. Sharpies are flat. You know? Yes, exactly. Exactly. So that's the only thing that's going to get me to make a move aside from sweeper activity. That's it. That's the better way to put it. I should have worded it that way from the beginning. Right? Sweepers are my risk management. They're my stock picking process. They give me a good idea of the environment out there, right? If they're not bombing names, there's a good chance that the environment sucks, right? Or it's a risk-off environment. So it's I like to look at it almost like my seatbelt at times. Yeah, and that's a good point. Tree brings up a good point of the type of flow. Okay, and I don't know if you guys have noticed this. All right, but this has been really, really interesting in the flow, and I'm staring at it all day. Maybe that's why. What we're seeing, okay, because we see some call buying. It's not like we're not seeing any call buying, obviously. There's always some call buying, weekly, same day, SPY expos. But what we've been seeing is, aside from what looks like shorts getting squeezed, okay, so in other words, the market starts to move higher and we start to see weeklies come in on ARK or SPY or whatever, Apple, Tesla, okay? And, likely weeklies, that's one of two things. That's either somebody gambling on a move right now, right? Fooling around in weeklies and SPY, or it's more than likely somebody who's short, who's hedging against the squeeze. Okay. And that's why, if you've noticed that every time the market bounces intraday, okay, and has a little momentum, we start to see a little pickup in that action. But as soon as that momentum dries up, right, and the market goes, the indices go quiet or fade, well, that call activity disappears off the face of the earth. Now, if that's not a clear-cut sign of hedging, I don't know what is. You know what I mean? Like, it's based on, it's almost, I guarantee you, it's algo driven based on momentum and for hedging purposes. That's what it is. Somebody's protecting a short position. There's some Momo to the upside on the S&P 500. You see some SPY calls, because if they're short, they're protecting it, right? And they're protecting it in same day expiration or weeklies. That's all the action. That's all the action we've been seeing. So I don't know if you guys have noticed that, but it's following the move where that's the worst flow. I don't pay attention to that flow. I look at the flow that front runs a move, is predictive of a move, that's diverging from a move, right? You hear me say that all the time. Like, if the market's selling off, the call buying that comes into that selling, that's the stuff I like. Not the stuff that's following the momentum up on that squeeze. Yeah, because it's not buying. You understand? It's not betting. It's hedging. Just like, Lourdes, just like when we were in a bull market, we would see puts in weeklies when the market pulled back a little bit, right? And remember, I have to tell everybody who's new, listen, they're not betting against the market. They're protecting their long positions, right? They built up all these, they're protecting it. So now we're seeing the opposite of that, believe it or not. We're seeing the opposite of that. That's why you're seeing, weeklies and in these spec names and stuff like that. Exactly, Praveen, exactly. So anyway, it's blatant. A lot of times it's really hard to judge what's, it's almost impossible. What's hedging, what's betting. But believe it or not, recently, that's how bad the flow has been. It's, to me, it's kind of obvious. It's obvious, that it's not real betting. It's obvious. And anyway, to solve that problem of being misled by the flow, that's why I tell you guys, it's all about accumulation. That's all it comes down to. When you get into these type of markets, you want to see the funds and the players that are buying. They don't care what the stock is doing over the short term, and they keep buying, and they're building a position. And it's usually over time, days, sometimes weeks. That's the stuff to pay attention to when you get into these corrective phases. Okay. So again, going back to the point, we're not seeing much of any of that. There have been commodity names, energy names. Now there's nothing. Couple names to put on a watch list. Oh man, Cal, forget it. Let me tell you something. It's to the point now that any decent sized order, Cal, that I see sticks out like a sore thumb. So I'll give you an example. Like, I forgot what name it was, but there was a decent looking sweep that came in, and I don't know when they have report earnings or anything. I said, I guarantee you this company has earnings due, because the order was a good looking order. And boom, lo and behold, they had earnings, because it was too good to be true. Seeing a real bet. And I give you an example. Here's again, according to my opinion, here was the best action today, right? Outside of the heart of earnings, I do this every day, okay? It's not that good, so don't get excited. But here, what look like bets to me, okay? Not weekly hedges that look like actual possible bets to me, okay? I've been grasping at straws here. PCG, okay? So this is a utility, right? You guys know PCG. September 14th, not a bad order, okay? Not a bad order if you like the name. Again, it's just one order in a bear market, but stuff like that's going to hit the top bet list. There was some buying in CBOE, December 110s. Now, this is exactly a candidate that you would watch for accumulation on this line. You understand? This is exactly. So this name goes on right away to a watch list. Now, what we've been seeing is you won't see action in this name. Or a lot of times, like Tree would come on the webinars and say, Jesus, they closed out those September calls. You know what I mean? They're not real positions. They're not building positions. But this is something to keep an eye on, especially if you're interested in the name. CBOE December 110s. Opening activity, that was the line. This is what the stock looks like, which I think is irrelevant right now because everything looks like shit, and that's good. All right. And even more so if the market's weak and it weighs on the stock, if you see them continue to come in and chip away at December calls, it only means one thing, right? Somebody's building a position in CBOE December calls, period, right? Doesn't mean it's locked. It's a lock to be a winner. You're going to make money. But what we're looking to do, we're looking to focus on real buying, right? Who's actually doing some real buying into a correction? That's what we're looking for. And there's not much of it, especially outside of commodities. So here's one name, put it on your watch list, especially if you like it. PCG caught one order. And what was the other one on this list? I don't remember. I don't even know what the hell. What's this thing? CCXI. Anybody know? I think it's a biotech, right? Watch them get bought out tomorrow. Boom. Let's see. CCXI. Oh boy. Well, yeah, there you go. Okay. All right. That's good though. Rather be down here than up here. All right. So you have an interest in the name. Same thing. I would look to see if they hit it again, because right now nothing's moving, and if they're really bullish and have conviction, they're going to add. If it's a short hedge, they probably just leave it as is. A decent size too. Oh, they're at a conference? That makes sense. That makes sense. All right. But guys, in a healthier market, as those of you members know, in a healthier market, right? Healthy. I'm not talking about a bullish market, because late last year, this list was just as bad. Okay. There was no new names, right? Apple and Tesla caught all the flow. So it's not whether the market's going up or down. But what I was telling you earlier about the flow being like a risk management system in itself, right? In a healthy market, you will see more names on this top bet list. There'll be more to choose from, right? At the start of rallies, you're going to see a lot more names. There's going to be a lot more new names that are seeing real buying. Okay. As the rally gets longer in the tooth and it has a higher probability of topping out, you usually see less amount of names, or the same names over and over again. But I stopped putting those on because that can get people in trouble, So it tells you a lot about the health of the market. It tells you a lot about the health of the market. Again, not to say all these things work out. That's not the point. The point, it's telling you the real buying, again, according to my opinion, that's out there. Yeah, Snap, I saw that order. It didn't look clean. And like, where can I post I saw that order. Didn't look clean. Didn't look clean. There was another one of those tech names that caught a big order that didn't look clean. They just don't look, none of those tech names. And the thing to understand too, Praveen, it's Snap catches big size orders in its sleep like it's nothing. Like if they have conviction and any confidence in a Snap move higher, they are going to tattoo that thing. You're not going to see $1 million sweep. You're going to see 10, 15 of them. That's the type of action it catches. Oh, Google. Okay. Google recently had one round of buying, but had a little buying. Apple had a little bit of Jan buying. Okay. But think about this. These are potentially the start of some buying. You know what I mean? The start of some buying. The start. Like I told you guys, prior corrections in the past, names like Net, SE, these are names I had no interest in buying at all, but because of the amount of flow, okay, because of the conviction that buyer had in those names, it forced me to play it. You understand? That's the type of action you want to see. Not where you make excuses. Yeah, that's exactly, Mike. There's puts, there's calls. That's why you can't make a big deal out of one order, 1 day of flow in a name like that, or Snap, or any of those names. Which one? FXI. Oh, the China ETF. It didn't appear on the OI changes, you're saying, Tree? Oh, on your feed. 10,000. Maybe it was tied. I'll check it out, T. I'll hit you up on Twitter. Might have been tied. Yeah, I'll check it out for you, no doubt. There's been a lot of tied action in like EEM in those, so maybe it was tied. I'll check it out for you. And I'll send you a screenshot like I usually do, so you could see. Yeah. So Mike, no, you're right. They're puts, right? And that's the other. Think about the put buying hasn't been too shabby. There's been some good looking put sweepers out there, right? You're not going to hear me say that, but there's been some good looking put sweeps out there. I kid you not. And you talk about aggressive, like we're talking about multiple that aggressive behavior in buying. You see some of the put action out there. Like you remember the aggressive buying in those DraftKings deep in the money puts, or this Rivian that they've been tattooing for the past few months. You know, that's what it looks like. You understand? That's what it looks like. You know, unfortunately, sweepers, it's not always bullish activity. There's bearish activity too. Yeah, so it's just not been on the side and in the stuff we want it to be. But we got to be patient. We got to be patient. I don't these growth names, Praveen. I don't know. I can't even. It's almost like I'm in shock looking at these things. And I've been through 2000, but you know, it felt different. I don't know. It felt different then. It felt different. Really? She had to. She had to. She's not dumb. You know what I mean? She's not dumb. She's got to be a cowboy. It takes a pair of coconuts to do what she's been doing. Yeah. I mean, think about it though. You know, anybody who knows the game knows it's flawed. You know, it's flawed. Like, you just, what do? You keep buying until they bounce? Like, what? And it's one thing, like if you're buying, you know, blue chip names that are profitable and, you know, that been around. And even there, obviously it's risk, because when you get into bad times, we've seen the blue chip of blue chip names head south. But it's one thing if you're doing that, at least you have the odds in your corner. You're doing it with the most speculative names on the board. You know, that's why, guys, a lot of these names, I swear to you, I don't have any interest in at all, because I've seen names like this from all my years in this game come and vanish. And like Katie said on the webinar we were doing, people just stop talking about it. You forget they even exist. Sal, the problem with the SPY put sweeps now, there's been a couple of big funds out there that have really hit those SPY puts hard, and they've been moving them around, and it's tough to know what's rolling, what's not. You remember there was one, what were they, SPY May 420 puts? Ridiculous. I think it was like $50 million worth. But there's been some big SPY put action throughout the year already, you know? So it's tough now. It's tough. Even the puts, they're tough right now. You know what I mean? It's really, really tough, because almost similar to like what we were experiencing late last year. You don't know what's clean. You know, the move has happened, right? So for like cleaner SPY put action, what you want to see is what comes in here. You understand? So what comes in if and when we do squeeze, you start seeing some size aggressive puts. That's where you want to start paying attention. You understand? Here now, like, you know, we see Rivian, I can't even believe my eyes. This Rivian, we see puts every single day in this Rivian, every day. Like, leave this thing alone already. No, find something new. Every day they're sweeping this thing. Every day. So we'll see. All right, we didn't even talk about this, okay? We got the CPI tomorrow, okay? We are lined up. We have a setup for a squeeze tomorrow, okay? I didn't buy anything. I would have told you guys ahead of it, into it, right? So if you were looking to be aggressive, again, nothing crazy. You roll the dice on some calls, and you hope they get some of the recent hedging for this CPI number to unwind. Okay. You get it with the way things are right now, you get a real nice squeeze by accident. Okay. But that's the extent of it. The more conservative way, which would be a lot easier to manage our risk, would be not to try to front run it. Let's see how the market opens up, and then keep an eye on sweeper activity, because I don't know if you guys remember the start of the squeeze. Do you guys remember? Even though it was all what we call junk in weeklies, they went ape shit. You remember that? And remember the names they were buying? That's where you knew it was just a bear market squeeze. They were buying all the names we're talking about, right? You remember that? Junk. Yep. So tomorrow you get the CPI. Hopefully, if you're not in anything like I am for a trade, hopefully the market's flat or down, and that's it. We're looking for sweeper activity to flip the momentum and catch a squeeze. I played today twice. I got stopped out this morning. I was holding on to some exposure to see maybe if we get a squeeze off the open. We squeezed a little bit, but then we fell flat on our face. We got stopped out. And then in the afternoon, I caught a little bit of a squeeze, but it was a lot quicker to take that off the table. So, but tomorrow we'll see. Maybe I'll give it a longer leash, meaning if we squeeze, I won't take profits. I'll either, put my stop at break even and try to get a little lucky, just to maybe catch something like this here. Yeah, I've been playing TQQQ. What'd he play? He played SPXL. I think that's S&P 500, Sean. That he's been playing here and there. But again, have a good night, T. Nothing major, Sean. I'm being honest with you. Nothing major. Nothing major. Again, I'm trying to, like I told you, I know if you probably get sick of hearing it, Sean, but I'm just trying to bide my time, hang around. I already started some SPY exposure that I'm taking on water. What I'm hoping to do is if we do get a healthy squeeze, I'm going to roll, that all the SPY exposure out, no matter what. And I can build on that, because that's why I did it anyway. I want to build around that. But Sean, I want to see action in names. You're the same way, right? I want to see new names, new action. We're going to get that again, Sean. We've been complaining about that for a long time. You remember? We've been complaining a long time. We needed a reset, right? We got the reset. We don't have patience, It takes time. Here's the reset. This is a reset, my friend. This is a reset. I really don't know. I never seen, I told you guys, it was almost, I had my tinfoil hat on, right? I never seen a Fed blatantly talk down risk assets like they've been doing. Okay. And the reason why I'm taken back by that is because that only spells trouble to me. That only spells trouble. Whether you're doing it or not, I wouldn't be as blatant about it. I know they want to be transparent, but now look what you got. You got buyers have crawled up into the fetal position and have gone into their bunkers. Okay. You have liquidity at the worst possible shape you can possibly have it in. You get something, you get one little thing to break, you're going to have an ugly scenario, So it just, I understand being transparent. It just didn't make much sense to me that they would come out and say what they really wanted to do like this. The only example I had, I told you guys, Greenspan with irrational exuberance, and that backfired on him. It led to the 99 run, which, listen, it wouldn't surprise me one bit if it led to something like that eventually. You know what I mean? Nothing surprises me in this market. But right now, it's ugly. It's ugly. It's ugly. But when it ends, Sean, before going into that rant, what I was getting at is when it's officially over, okay, not bear market rally, not this, okay, when there's a floor in place and they're going to start to build the right side of this chart in an uptrend, we're going to start to see new names we're not even aware of, Sean. You know what I mean? That's not even on our radar, that more than likely are profitable, have a solid growth rate. You understand? Like legitimate companies, solid companies that players are starting to buy. New leaders. That's the best way to put it. That's when it ends, that's what happens all the time. You know, so you can have all new names and all the shops of the world, the Twilios of the world, the Rokus of the world. They all started the same way. I remember buying Roku off initial activity. I had no idea what that thing was. You know what I mean? It wasn't on my radar. It got tattooed, So that's, my glass half full, what to look forward to here. It's a matter of timing. And unfortunately, I really have no idea how long it will take. Nobody does, I think. Nobody we know anyway. Nobody we know. But the scarier it gets, the faster, the quicker the process. I'll leave you at this. You know what a lot of people, Harnett of Bova, Sean, that we follow, a lot of people, what they think is you get maybe not as vicious as this, but some sort of bear market rally eventually, okay? And then you get the kaboom in September, October, when the kaboom usually happens. That's what a lot of people, that's the way they're looking at it. It makes sense, but that will, what you call it? It prolongs the agony in the sense. We want to see, if possible, we want to see the bang bang now and get it over with. Yeah, Eric, that's what a lot of people are thinking. That's what a lot of people are thinking. That eventually you get some sort of bear market rally, or at least a tradable low that holds for a bit, and then it revisits. And like Harnett thinks it breaks. Like what was Harnett's number? What was he looking for, Sean? Is it 3,000? Not that low, was it? I forgot. Is it 3,500 or 3,000? That Harnett's calling for the end game? $3,600, maybe 3,000, Praveen? I know it was the number I was taking back. I don't know if it was 3,600 or 3,000, but I think it was 3,600. You sure, Praveen? Wow. Yeah, so he's looking for something like that, like something you get a little. Yeah, that's not as bad as 2008, but that would have to play out like 2008. Or actually, it's 3,000, Panda? Oh my God. Oh my God. Yeah, I mean, that's a good point. The lower the better. You're right. And the problem is, it's going to draw out, the process. That bear market rally. But before you know it, it'll be September, October. Can you imagine if we're in the same type of market, September, October, with the volatility that usually comes around then? Like we're supposed to be going into calm time right now. Oh my God. So yeah, like I said, this is a kerfuffle. This is a little pickle the Feds got themselves in. They're bidding up 18. They're doing that already. Jesus Christ. Yep. They're bidding up these. Quickly. Because I know, same thing, especially I get the McElliott note right at the open, and you try to read through that and make sense as the flow is starting to come in. But I looked through the equity part, and this is what and then I'll let you guys run. This is what looked like the most important thing, takeaway for us anyway. All right, because I saw a lot of people talking about VIX in the room today, wondering why he was acting that way. What's going on? There it is. You gotta be kidding me. All right. So here's what he's talking about, right? Turning to equities, the key themes of the past week might surprise some, but explains the meh vol response to crashy, right? So in other words, it's almost like a mechanical drawdown here, right? It's not, it's not no excitement behind the selling. Due to the obvious liquidations and deallocation flows we have been highlighting in recent days, weeks, there's no real demand for crash in the equity vol space, really just rolling out their crash protection. So no new crash protection being put on, especially as we already have been stuck at such already rich absolute levels in equity vol. Players have been over-hedged on the way down. So players have been hedged for a while, right? Sentiment's been pretty poor. Last week was, as a matter of fact, largely calls over puts. So last week, as crazy as that market was, right, ruined our put to calls, you had more calls trading than puts, right? More interesting calls over puts. And that's what he talks about here. The reason for that, because funds are so gassed on net exposures, all the positioning stuff we look at, right? They have no exposure to equities. Many are more worried about missing an upside move than downside, So what they're quicker to do is look to put on some quick call exposure because they're concerned about or looking for that squeeze rather than concerned about a crash. So that's what's been going on, right? And that's why we don't have capitulation, right? That's not capitulation. Capitulation is the opposite of that. Well, I wouldn't say the opposite, but different than that, in where you get that demand for new protection, right? So capitulation would look like we spoke about on these charts, you'll get just an outlier, right? Bink, bink, bink. And even the VIX, right? The VIX, I have the chart here somewhere. Where is it? Oh, look at the VIX, okay? See, and remember we were talking about this? This was late 2018 too. You get this wide range, right? And when it's up at the upper end of the range, it's elevated and you get this crazy volatility, but capitulation is going to look like this. Ooh. Right? Doesn't have to be major. It's just going to bust out of this range. All right. And remember, we looked at it Sunday. That's, if you go back to 2018, what is going on? What is going on with these charts? Oh, there we go. All right. So those of you who weren't around Sunday night, we looked at it. This is what it looked like. I think I'm going too fast for trading. My dog's snoring already. She snores when she's awake, this dog. Hold on. Oh, I'm so close. Come on, give me the chart. Look at this. You believe this shit I got to deal with, man? Why is it? Where'd it go? Where'd it go? What is going on here? Okay, here it is. See that? Doesn't it look similar? Watch this. Okay. Doesn't it look like right where we're at right now? Later, Eric. Right? Same thing. Range. We're at the top of the range here. This is in the heart of December. Markets are just bleeding out. Mnuchin is calling the banks to see if they have enough liquidity. And meanwhile, VIX doesn't move. And then, bink. That's all. Look what the, I can't take this thing, I swear to God. See how this can drive you nuts, though? This can drive you nuts. So then you get that breakout here. Didn't last too long. What is it, a couple days? 1, 2, 3 days. And then it just, that's it. And that was the bottom. And if you look at the put the calls, they look exactly very similar. Very similar. But that's that new buying that McKelly's talking about in that note, that it's not around right now. They're more worried about a squeeze than they are of crash. Makes sense, right? All right, ladies and gents, did I lose you guys or no? Or this is, I think, frozen. Hold on. Yeah, no, I had to reset this thing here. Hold on. Looked like it. No, I thought it was frozen there. All right, anybody have any questions before we wrap it up? We're good. So patience is a virtue. Yeah, of course, part of the game. Patience is a virtue, but stay interested. Stay interested. You know, don't lose interest as long as it takes. Think of it as a good experience, and there's light at the end of the tunnel. Hell yeah. Sean, have a good night, everybody. Have a good night. Enjoy the rest of your evening. I'll see the majority of you mañana. Later, guys.